accounting for fixed assets is very, very strange. In a governmental fund, it's very strange at least. Enterprise fund, proprietary funds, fiduciary funds, that's all fine. But governmental funds is very strange because they're not considered to be financial assets, and therefore they don't go into a governmental fund. In fact, fixed assets belonging to governmental funds, in other words, fixed assets that are not part of a proprietary fund, do not go into any funds. They can go into something called a fixed asset account group, which is just a list of accounts, but they don't actually go into any funds, which is really cool. When you prepare your government-wide financial statements, they will need to be added in because you do record all economic assets in the government-wide financial statements. But in governmental funds and the governmental fund financial statements, you're not going to include fixed assets. And it's pretty weird. Anyway, governmental funds recognize the cost of the acquisition of equipment and other capital assets as an expenditure in the year the asset is acquired. When you spend money on fixed assets, it's an expenditure. And works of art, historical treasures, these are also going to be treated as expenditures. Contribution revenue could be recognized in the case of donated assets, but they're going to be capitalized. The wording here is a little unusual, but art and historical treasures are considered to be fixed assets. So they're going to be treated the same way as fixed assets. Let's go through some journal entries so you can see this because it looks really weird. So Barb City acquires a truck. So first thing they're going to do is they're going to order the truck. So the journal entry will be to debit encumbrances, and it's capital because this is a budgetary journal entry. And they're going to credit budgetary fund balance assigned for encumbrances for $12,000. Then they buy the truck, so they're going to reverse this entry and debit budgetary fund balance assigned for encumbrances for $12,000. And they're going to credit encumbrances for $12,000. And then they're going to purchase the truck. Get this. The journal entry to purchase the truck would be debit expenditures for $12,500 and credit vouchers payable. It is an expense because this was an appropriation. Originally, they appropriated that they could buy a truck. They recorded an encumbrance, and now they record the expenditure, and then it's going to appear actually on the P&L, whatever you want to call it, as an expenditure. It's very, very strange. We've also got long-term debt and capital leases. By long-term debt and capital leases, government funds record the proceeds differently again, in that bond proceeds are other financing sources, which is kind of like revenue. And bond issue proceeds, they're not really revenue because you have to pay them back. So we don't record them as revenue. They're going to be called other financing source, but it's not a liability. The journal entry, to record bonds would normally be debit, cash, credit, bonds payable. But since you don't have to pay this within 60 days of next year, of the end of the year, then it's not a liability in a governmental fund. So the credit is going to go to other financing sources. And we're going to see this in a long example that I'm going to go over in a moment. And again, bonds payable will not appear on the balance sheet of the fund. But when you do government-wide financial statements, then of course the long-term debt is going to appear there as a long-term debt. Capital leases, the GASB now follows the same rules as the FASB. And from what I understand, they're going to incorporate the new capital lease rules that the FASB has approved. And Again, these would be recorded in the fund as other financing sources when you get whatever it is and expenditures. But in a proprietary fund, you would use the FASB method. And then when you do your government-wide financial statements in a governmental fund, you're going to use the same method as the FASB tells you to. Likewise with investments. GASB 31 requires fair market value for investments. So all different kinds of investments need to be valued at fair value if it's determinable. And changes should be recognized as investment income. And GASB 40 requires all the disclosures, policies, and different, the nature of investments that are made by the government. And the GASB, again, is mainly concerned with the government-wide financial statements. So in the fund accounting, I don't think that you have to do fair market value adjustments in fund accounting, but for all investments. But everything would need to be adjusted to fair market value with the gains and losses reported as income, just as you would in FASB financial statements in your government-wide financial statements.